Impressive stuff, this, right? Especially on the back of what we saw in Greece not too long ago.
Yeah, it was a very impressive result. We had a cover of 3.5 times. We've got the maximum amount away, 750 million or so. Admittedly, it wasn't a lot, but certainly the demand is there. Investors are very yield hungry. I think the threat of ongoing threat of deflation in the region, coupled with the speculation that the ECB may embark on QE at some point further down the line, is encouraging investors to zap up these high-yielding bond markets.
Ireland, of course, requested or chose not to request a precautionary loan. Do you expect Portugal to do the same as Ireland?
I think it's looking increasingly likely that Portugal will be able to get away without a precautionary loan and follow in the footsteps of Ireland, particularly as a sort of fundamental situation in the economy has been improving in recent months. I think it all bodes very well in the immediate future for Portugal.
And a clean exit from the rescue package.
Yeah, okay.
Exactly. How many times, Phil, can I ask you how much further peripheral yields have to go? How long can we milk this story?
It seems to be ongoing at the moment. I mean, if you look at the case of Portugal, I mean, that is the sort of highest yielding market in of the larger liquid bond markets, and certainly it's outperformed considerably within this general peripheral rally. It's outperformed Italy, Spain and Ireland, I think to the tune of 130, 140 basis points in recent months since the beginning of the year. Certainly you would think that yields can fall further in Portugal, particularly if we get better news from the rating agencies. They're due to review their assessments of the country very, very shortly. You would be looking at yields closer to 3%. I mean, we've seen Italy, Spain, 10-year yields already down at that level. They may be able to go a little bit further, but it's looking increasingly likely that additional spread tightening there could be more and more limited. I mean, we're already seeing at 2 years, sub 1% yields in Spain and Italy are not that attractive, and I think that people are being encouraged to extend out on the curves. That can keep spread narrowing going at 10 years for a little while, but we are getting towards the sort of limits of this process, I think.